Excited to have this conversation. Just for a quick disclaimer, Bite Investments is a actual investment at JMP, and I personally have an investment in Bite as well. So I believe in the company, but also want to give full disclosure. With us today, we have Will Rudebeck, who is the CEO and founder of Bite. And so, Will, first off, looking forward to this discussion. Thanks for doing this with us. I think it would just be helpful for the audience that maybe doesn't know the business to hear a little bit about your background and why you started Bite.
Sure. Well, thanks very much, Devin. And so getting on to my background, our background, who is Bite, I actually co-founded a business called VCP Apex back in 2009. And that business is a global business that's currently operating across multiple jurisdictions, and it's an alternative asset management advisory business, essentially or predominantly focusing on capital raising and fund placement. And certainly over the last 14 years of running that business or being a part of that business, what has amazed us most is really the lack of innovation, and in particular digitalization across the alternative asset management industry. And so 4-5 years ago, 2018, we decided to take advantage of this opportunity, and we seeded and incubated a fintech company called Bite Investments. And really what Bite Investments did was try to build upon what we were seeing in the industry across the alternative asset management industry, and provide a solution that catered to all alternative asset managers, regardless of their geography, regardless of their LP, limited partner, investor makeup. And so we seeded and incubated a fintech business that has spent the last 4 years developing technology that we now license out to alternative asset managers across Asia, Europe, and here in the US. Technology that provides a GP, a general partner, a fund manager with a fully customizable end-to-end user platform or user service for their investor base, again, regardless of the type of investor that they are catering to. So what that essentially means is that should a alternative asset manager white label or license Bite's tech, and the software is called Bite Stream, what they would get in return is they would license or get a number of platform features, starting importantly with the compliance gatekeeping service, which is important when you are marketing your fund in different jurisdictions, or onboarding limited partners investors in other jurisdictions, because they go through a different onboarding compliance and regulatory process. In addition, you would white label a digital marketplace, and this is not a data room. This is much more than a data room. In today's post-COVID world, it is particularly important for managers to fundraise more efficiently and more attractively. And so rather than doing 5 cities in 5 days or 5 countries in 5 days, whatever these GPs used to do, they can present their products more attractively through a digital marketplace, which enables them to upload media content and show a number of things that a pure data room wouldn't do. Of course, in addition, what we also license is a data room, because any investor needs to get into the details if they are a new investor or even an existing investor and re-upping into a new product. So we would have a compliance gatekeeping, a digital marketplace, a data room. In addition, we have an e-subscription service, which means that everything, again, this whole process, this onboarding, whether you're onboarding or getting new investors to subscribe, everything is digitalized regardless of the investor type. And we have a full e-subscription service in addition to a reporting service, and last but not least, a CRM system that really puts it all together. And so that is the technology that we provide. I would say that we are doing something we are operating in a completely different lane to how others have operated historically. We are certainly differentiated because of the way in which we cater to all alternative asset managers, the way in which we cater to for all of their investor bases. And we provide this end-to-end user service, and we're multi-jurisdiction. And importantly, we have built this tech in a highly configurable way, low-code way, which means really we are giving the keys to the car, as it were, to the manager, so that they can customize it how they want, and they can bring in all the users of the tech, of the users of their platform, whoever they want to invite in. So of course they would have their investor relations team. If they're a large organization, they might have their legal team, their compliance team, they might have their fund administrator. And essentially they would be able to, if they wanted to put an NDA in before the digital marketplace, they'd be able to do that, change the language, change the colors, whatever it may be. So that is first and foremost what our tech is. We are very much a SaaS business. We focus on selling this SaaS, or licensing out the technology that we've developed. All of our technology is proprietary technology, and we are developing key initiatives, or we have key initiatives such as we've developed Bite Sign, which is arguably could be a disruptor in the industry to something like a DocuSign. We certainly have Bite Comply, which is a sort of an e-passporting system, something that is a key initiative of us. So in addition to providing the full end-to-end user service, we're constantly trying to innovate and trying to make a manager's life and the way in which they operate really seamless, which is particularly important because, as we know, many alternative asset managers have been operating with their investors in the same way for the last 20, 30 years. And a lot of it is done by Excel or using the occasional technology provider for a particular service. And so the tech that we have developed is very attractive because it reduces complexity, reduces administrative costs, it streamlines your investor processes. So large alternative asset managers like it. If you're a smaller alternative asset manager, you like it because rather than paying for multiple technology service providers, you can just pay for one in a very affordable way. So that is first and foremost really what we do. The final thing I would say is that we try to always think ahead, and we have spent much of the last 4 years or even 15 years developing ecosystems. And because we've always, the fund manager has always been our target client, we try to think beyond just making their lives simpler from a technological standpoint. And so we do have ancillary services or complementary pieces that could also be attractive to them. I mentioned to you before that I co-founded VCP Apex, which provides institutional fundraising access. It provides advisory on secondary spin-outs or just can advise alternative asset managers in other ways. In addition, we have been developing a wealth management ecosystem predominantly outside of the US to date, but again, a lot of GPs that we're seeing, a lot of alternative asset managers are looking to digitalize now, not just to streamline their processes and make them more efficient, but also to tap into new capital markets, namely the wealth management market. And so being able to provide a holistic one-stop shop solution is in our minds particularly important.
Yeah. Terrific. Thanks, Will. A lot, I think, to dig into there. Maybe where I want to start is, so this is, a SaaS solution that really is going after the entire market, and it's end to end. So it's a little bit different than some of the other technology solutions out there. The flip side, there's a lot of technology firms that I'm sure appreciate the alternative asset management market is a big and growing space. Why have you not seen some of these other big CRM providers or RegTech, or why have they not been able to kind of put this together and be successful, and therefore why is Bite positioned to succeed?
Yes, well, I think there's multiple reasons. I think firstly, if you look at the alternative asset management industry, you have GPs, the managers themselves. Most managers have institutional LPs, or historically have been very much institutionally backed, and combine that with the lack of innovation that's been there in the marketplace has meant that the investor relations teams or the alternative asset managers have been able, or have dealt historically, with their large institutional investors in a more bespoke offline way. And so historically there hasn't really been necessarily the need or the demand for this part of the business to digitalize. However, that has changed. A lot has changed. And first and foremost, we live in a post-COVID world now. As I say, the alternative asset managers, even if they are exclusively institutionally backed, are now starting to fundraise more online. And so they are themselves needing to think about how to digitalize and how to come across better. I also think that regulators in the alternative asset management space have arguably been slow, or more slow, particularly when compared to the traditional asset management market, to really understand how these products are being sold, particularly when you're including multi-jurisdictions. And so just really there have been a number of reasons as to why these wealth tech firms or reg tech firms that do provide good data rooms or good CRMs or good e-subscription services have not been able to penetrate and sell into the alternative asset management market, just because it hasn't, you've got to start with the asset management firms themselves. And so historically that just hasn't really been a key theme. We also know, and I see that you've got great firms like certainly iCapital speaking also. You've got groups like this that have really opened up in particular and have really focused on opening up the wealth management market, and that is really making a lot of these GPs, managers, want to move into the wealth management market or want to go after the wealth management market. Historically, alternative asset managers used to diversify their LP base by geography, not by type. All of their investors, or most of their investors, were institutional, and now there is this big shift. Also, maybe we've certainly seen over the last 10 years there's been pressure or in relation to on fees from the larger institutions. But also there has been this rising wealth management market. And so I think that now the GPs, the alternative asset managers, have started to realize that they need to digitalize for all of those reasons. And because of that, I have no doubt that many more of these firms will start to focus and start to try to do what we will do. I think it's not necessarily so much about building the technology or adding in the additional verticals. I think having overseas regulated, there's a lot of compliance and regulatory know-how that you need to incorporate into the technology as well. So it's still, to be truly global or multi-jurisdictional, I still think there are high barriers to entry. But for sure, those wealth tech and reg tech firms that have probably previously tried or just not penetrated the market will now start to.
Yeah, great. And then in terms of the technology solution into the industry, some firms are, and I think even today, we're talking to Ares and Blue Owl, and these are large publicly traded managers, and there's several others, and they are very forward leaning and tech savvy. They build technology in-house. They partner with third parties. As you go down the spectrum of managers, I know Bite is focused on the largest managers and has connectivity into them, but also that technology, to me, it almost feels more important, or finding the right solution for the managers that don't have the size and scale, because the only way they can access the market is with the right technology solution, because they're not going to be able to just have as many boots on the ground. So how does that kind of play into your strategy as a firm, and where you guys you feel like you can lean in?
Yeah, I mean, look, it's a very good point. I think that having spent, as I say, many years just targeting or speaking to and going after, predominantly talking on fundraising initiatives, but to alternative asset managers globally, far and wide, whether it be very small managers or startup managers or spin out managers from larger groups, or the very large managers, we sort of understand how they, or we believe we understand how they are set up, and therefore we have honestly tried to build tech that caters to all types of managers. And so if you are a very large group and you have your own CRM system, for example, we absolutely, through our technology, we have built it in a way which means that we can integrate very easily with other systems. And I think that this is particularly important, because we're not trying to dislodge a sales force, so we're not trying to get a very large alternative asset manager to stop spending or reverse all the tens of millions or however much money they spent on their CRM or whatever systems. So we have developed the product in a way to API to complement or connect with other systems if required. And then to your point, absolutely, for the smaller managers that have not had the resources, the time to build their own systems, this is, of course, particularly attractive. And it really is a way in which any manager, no matter what size, if they use our tech, they have all of those services catered to in a very low cost, affordable way, which is and it enables them to gain exposure to investors globally. And coming back to the theme of this discussion, the democratization of alternatives, in my mind, that democratization of alternatives has to start with the manager. You have to be digitally enabled to enable to democratize those products, and that is just something that has not happened historically. So yeah, it's exciting, and I think we really hope, no matter how big, how small, how strong your track record is, we just hope to really revolutionize the way in which the alternative asset management industry has historically or currently it operates, and I think it's certainly long overdue and certainly now very timely.
Okay, terrific. I want to talk a little bit about just the international opportunity. That was something that was interesting to JMP, and a lot of firms are kind of US centric, and they're trying to explore going international. Bite really has this international first, I think, footprint and coming into the US. And Will, you lived in Hong Kong, so obviously understand Asia very well, or now in the US. But maybe just talk a little bit about the international dynamics of this market, how important it is to understand all the jurisdictions in terms of fundraising, and then also how Asia, I think that we're talking to a lot of our publicly traded asset managers that feel like Asia is this next massive opportunity for fundraising, and just that market, where that sits relative to what you're doing in the US as well.
Yes, absolutely. So, well, as I said earlier, the world, despite what some people might be reading is still very globalized. I mean, global. There are managers look to sell into or raise capital from multi jurisdictions, and that's regardless of whether you're an institutional investor right down or going after these accredited investors. I think what is clearly what has where we've seen enormous growth, and we see continual rising alternative assets under management, but we have seen a massive growth in the wealth management market, and this part of the market is just so underallocated to alternatives. And to your point, overseas, or you mentioned Asia, the wealth management market there is growing incredibly quickly. Yet the wealth management market, or accredited investors that cater to those accredited investors, are significantly underallocated to alternatives when compared to institutional investors or even the larger family office investors. And when I say significantly, I mean enormously. And there are a lot of wealth managers. I mean, our estimates, internal estimates, put the wealth managers that within Asia alone that are within our ecosystem are under 2% allocated to alternatives. And so there's not only an increase in rise in the wealth management market, but also a massive these groups are underexposed or underallocated to alternatives. And so again, it comes back to, in our minds, to really take advantage of that, we have to start first and foremost on the GP, on the managers themselves. And if they are digitalized, then they will be able to, or they'll be set up to tap into that rising market and really benefit from that uptick, because it will only be a matter of time before that 2% or whatever the number is ends up increasing much more towards the sort of the institutional levels. I'm not saying that if you look at pension funds that may be 30% allocated to alternatives, I'm not saying that the wealth management market will get up to 30% anytime soon, but if anything, even if it got up to 5 or 10%, it's still an enormous number.
Yeah. And it feels like at the very least, you need to have a more streamlined tech solution, whether you're operating with your existing institutional LPs or you are increasingly looking to
So I think a lot of people have looked to digitalize to tap into the wealth management industry because you have to, because it's the KYC, the AML procedures are so onerous that it wouldn't make sense to commercially go after small tickets without being digital. However, we need to remember that, I mean, whatever the figures, and this is not a backed up figure, but whether it's 99% of any alternative asset manager that I meet has an institutional investor. And so if you're catering and providing the best technology solution to alternative asset managers, you need to have a solution that absolutely caters to that alternative asset manager. And the way in which we've built it, we know that different groups, they may be very large, they may have their own systems, want to do things their way or do things the way their compliance teams do, and that again is why we've developed it in a configurable way that caters to every type of investor.
Terrific. Will, that's a great place to end this. If anyone has any follow-up questions, I'm happy to connect you into the company. But thank you all for joining, and Will, really interesting discussion, and look forward to continuing to follow the story. So thanks so much.
Perfect. Thank you so much.